media is focusing on. Before I do that, there's one point I wanted to make that Warsh said, and this was, he said this in his prepared remarks, and he then talked about it again in the Q&A. But he said that without the forward guidance, he likes the fact that long-term interest rates are moving higher. He said that this is good news that both real interest rates and nominal rates are higher. And, I disagree with his assessment about real rates. Nominal rates are definitely higher, and they moved a lot higher today. But I think real rates are actually falling because I think the inflation rate is going to be much higher than what the bond markets are assuming. So if you have a benign outlook on inflation, looking at the increase in nominal rates, you might assume that there's also a commensurate increase in real rates. Or maybe you're just looking at the tips or something like that. But I don't think that that's what's going on. I think real rates are actually falling because I think the markets are underestimating how much inflation is actually going to be. But what Warsh said was this is a good thing because the markets aren't cheating, because they're not taking their cue from the Fed. And I agree with that. I've never liked the forward guidance where markets are pricing things based on what they think the Fed is going to do, not based on what they believe is economically fundamentally justified. They're just focusing on, hey, what's the Fed going to do? So regardless of what we think, we want to price assets based on what we expect the Fed to do, even if what the Fed's going to do is wrong, right? It's all about expectations. And he said he doesn't want to do that. And in fact, Warsh specifically said he wants to be able to take cues from the markets. And if the markets are pricing things based off what they expect the Fed to do, then those cues are worthless. He wants to actually see what the markets are doing so he can listen to the markets. So if rates are going up, that means something if they're going up or they're going down. If they're just going up or down because of what they expect the Fed to do, how does the Fed learn anything from that if everything that's happening is just based on what it's saying? It's like it's skewing the markets. It's interfering with the very results that it wants to use to make policy. So Warsh is happy now that the markets are kind of doing their own thing. Although what the markets are doing is telling him that he needs to hike rates, and he's not doing it. And that came up in one of the Q&A. And in fact, I might as well start with that question. That was from Steve Leisman, CNBC's guy. And this was in a follow-up. I forget his initial question because it was the follow-up that I thought was more interesting. And it may have been this very discussion about forward guidance. But he said that, okay, Chair Warsh, you're saying that you want to listen to the markets. And you've noted that the markets are moving rates higher. So if you are listening to the markets, what are those markets telling you? And I was hoping to get an answer, and I didn't. He pretty much sidestepped the question, which was a good question, because you're listening to the markets. It's pretty obvious what they're saying. They're saying that rates should be higher, so you should have hiked rates. Yet, why didn't you do that? And that was really the focus of the other two questions. It's more of a put up or shut up. It's stop talking and start acting, because all of this tough rhetoric, and he repeated this in the Q&A, right? He keeps on talking about how committed they are to that 2% target, and not even like slightly above. Like, we won't even settle for 2.1. He's not even talking about the right or the left of the decimal point anymore. He's like, we are committed to getting to 2%, and we're going to do whatever it takes, despite the fact that he's done nothing. So one question he got was, the reporter said, well, so far all you're doing is talking, right? Which is true. He said, what are you waiting for? He didn't answer the question. What are you waiting for? He didn't have an explanation. Now, he talked about the fact that, hey, we haven't been here that long. It's only been, whatever, a month or whatever it is. We're still thinking about what we're going to do. We're still assessing things. What's to think about? What's to assess? He's already said that inflation has been way above 2% for more than 5 years. Why is that? Because rates have been too low for those 5 years. Because the Fed has created too much money. Because the balance sheet has been too big. You don't need to wait for the recommendations of your task force to tell you what's needed. We need higher interest rates and we need a smaller balance sheet. Yet he is delivering neither. And in fact, then another reporter asked him to define what he meant by no tolerance for inflation, because he kept saying we have no tolerance for inflation above 2%. Okay, well, it's well above 2%. What does that mean? Because you say you have no tolerance, but you're not hiking rates. You're not doing anything. Now, one of the things that he kept using as an excuse was that we don't have a magic wand. And he must have talked about his magic wand at least 2 or 3 times. Like, well, what are you expecting? We don't have a magic wand. Nobody thinks the Fed has a magic wand, but they do have these tools that they constantly talk about. So why not use your tools? Yes, you can't wave a magic wand, but you can wave your tools or use your tools. You can raise interest rates. It's not a magic wand, but it's something that you could do. You can shrink the balance sheet, you could shrink money supply, you could do something. What the Fed is doing is absolutely nothing, and then claiming we don't have a magic wand. In other words, what they're saying, or what he's saying, is inflation is not going to go down, because the only way we could reduce inflation is if we could do it by magic. But unfortunately, we don't have a magic wand, so I guess you're SOL, right? You're going to have to, stay with inflation, even though we have no tolerance for it, and we are determined to bring it down. Since we don't have any magic spells to cast, what is the reason, right? When people are not asking themselves, okay, if this guy really is committed, as committed as he says, to bringing inflation down to 2%, why did he waste 2 FOMC meetings and not hike rates? Even when the market was at least opening the door to an expectation that rates were going to go up, why not do it? Why not put some, words and put some actions behind your words? There's one of 2 possibilities, right? Either, words is all he's got. He really doesn't want 2% inflation, or he'd take it if he can get it, but he doesn't want to do what it takes to get it. He doesn't want to make the trade-offs. He doesn't want to make the choice. So he's thinking, look, if I can get 2% inflation just by talking about it, then fantastic. Because he wants to avoid the other trade-offs. He wants to avoid recession. He wants to avoid stock market crash, real estate crash, financial crisis, all these things that might happen if he really did what it took to bring inflation down. So he doesn't want to do it. He wants to cheat. He wants to see if I can get it down just by talking about it. Well, that's obviously not going to work, right? And if he thought it was going to work, he should know by the market reaction, which I'm going to get to, that it is not going to work. And the other possibility is it's